Okay, so let's make a full breakdown of the situation that we currently have on NZD USD. Now, starting from the monthly time frame, we can clearly see that the market has tested and rejected this very strong monthly trend line. In fact, from here, the market had already started all this big move to the downside. And currently, the market is not only testing this trend line, but is also testing this very strong supply area from which we definitely expect the market to give us a move to the downside. Why? Because this is what the market did. Impulse, correction, lower low, equal high. When you see a market do something like this, so impulse, correction, lower low, equal high, you expect a wave to the downside before the continuation to the upside for the creation of this inverted head and shoulders. So basically from here, you want to see the market give you a wave to the downside. Going down on the weekly, what we can see. Now, on the weekly time frame, we can clearly see that the market currently is above weekly support. Here we have this red candle, which is the only candle that is not related to this impulse to the upside, showing that here we had strong supply, which is now demand. So here we have quite strong support that the market can respect. So before we can be looking for any continuation to the downside, we need to see a break from a weekly closing perspective of this structure, which obviously we can't have before this 6 days and 12 hours. Going down on the daily, what do we have? Now, on the daily time frame, we had spoken about the fact that we definitely wanted to see the market make this move to the downside. In fact, in our previous analysis, what did we say? Now, first of all, I will link it in description so you can go and check it out. But we said that from this zone here, we definitely wanted to see the market give us this move to the downside, which is currently what the market is doing. However, from a daily perspective, we can see that here we have all the structure that we have already identified on the weekly. So both on the weekly and on the daily, this is an extremely strong level of structure. In fact, we had resistance here, again resistance here, now turn support here, and again support where the market is currently testing it. So before we can be looking for any continuation to the downside that we would like to see from a monthly perspective, as we have seen at the beginning of the video, we first need to see the market break all this structure, which definitely won't be easy because, as we said, on the weekly and on the daily, we have very strong structure support at this zone. So even though on the monthly we would like to see this wave to the downside for the creation of this inverted head and shoulders, we still cannot be looking for the continuation to the downside until we will see a clear break of structure. Now, before I show you how we will be approaching this situation in which we have a bearish target from the monthly, however, we have daily and weekly support, let's go and give a quick check at what we have from a COT perspective. So commitment of traders, what the biggest banks and institutions are currently doing from an NZD perspective. Now, keep in mind that if we check the NZD, what we are actually checking is already NZD USD. If you're asking yourself why, it's because all currencies on the spot are traded against the USD. So if you're checking the data for the NZD, you're already checking NZD USD. And what we can see that clearly net positions have been decreasing with the last reports, going from positive 2.4K with 19K longs and 17K shorts to a negative net positioning with 18K longs and 20K shorts, bringing the short exposure at 52%. So clearly, institutions are starting to sell NZD USD, and in fact, the market already started to react to this shift. However, we still don't know if they want to break below this structure. But that is not a problem because trading is reactive and not predictive. If from here the market will basically push to the upside and respect the level, then that is not a problem because it's not any of our business. This move to the upside, we're simply not interested in the move. However, if from here we will see the market break to the downside, at that point, we will have the monthly, weekly, and daily timeframes all showing the same direction. And if all timeframes are showing the same direction, that is where the opportunity comes. So after the break, on the retest of the structure, this is exactly the zone that with students we will be monitoring for a potential trading opportunity. In fact, if the market will break on the retest of this level, we will have all this previous support, which is term resistance here. We will have the possibility to create this impulse correction and impulse pattern to the downside. We will have the confluence of the Fibonacci taken from the high to the low of this impulse, possibly at 0.32 or 50% Fibonacci confluence. And instead of this area, what we will be doing with students, instead of the zone, we will be monitoring price action on the 4-hour time frame with students, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside, creation of a lower low, and completion of this impulse, correction, and impulse pattern to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.